On this episode of After Earnings, Robinhood, the platform that helped usher in the rise of the retail investor. I'm joined by Steph Guild, Chief Investment Officer at Robinhood, to discuss the company's evolution from a trading platform to a broader investing and wealth management business that now offers retirement accounts and managed portfolios. We'll also talk tokenized assets and how Steph views prediction markets. Let's get into it. Steph, thank you so much for joining. I wanted to start by talking about the user base at Robinhood. Now, many of your users started investing for the first time. For a lot of people, Robinhood was their entree point into investing, particularly in US equities. As you look at these cohorts that either have matured over time or are going to, how do you keep them engaged? And how do you make sure that people grow up inside the Robinhood ecosystem?
We've thought a lot about this, and we do a lot for that. So when we started out, as you said, we were mostly focused just on trading. And that's still our core customer base, the active traders, even the ones that have grown up, and they remain active traders. And we just continue to give them the tools through Legend and things like that just help them make good decisions on their own. But then a couple of years ago, we launched retirement accounts and started creating a different vertical for us, which is we call share of wallet. And it's essentially, how can we give advice? How can we help people with their long-term money? Who is transitioning to only caring about for the long term versus the short term? And with that, we've launched Robinhood Strategies, which I'm in charge of. And we will launch lots of other account types, eventually. And we also are, beyond that, looking to expand internationally. So we think about the person who was 25 with us and is now 35 and potentially married and potentially has children, and what do they need?
Well, let's talk about that demographic, right? That everyone grows up, and let's talk about Robinhood Strategies. So you moved over from 21 years at JP Morgan. You were in the private bank in your position there prior to coming to Robinhood. There is no more blue chip financial player on Wall Street with incredible history. Yeah. And you came over to Robinhood to build the Strategies group, which, as I read it, though I'd love to hear your description of what this group does, feels to me more like the sort of private wealth in the traditional sense of the word, white glove service. Is that what you're doing at Robinhood Strategies?
That's what we're trying to do.
Okay.
I mean, I came over to help in lots of different areas, and we cared about the first-time investor, but Strategies was... what I tried to do is take the 21 years at JP Morgan, 11 of those in the private bank, serving ultra high net worth for the most part customers. The minimum was 25 million. And then say, okay. I mean, the thing that hit me when I joined, even the first day, was, wow, when you have money, you get, not only do you have a lot of ways to continue to hold your money, but you are given a lot of opportunities to make money. Portfolios that you can participate in are totally different. Ideas are brought to you all the time. So I thought, how can I take all of those experiences and use technology to deliver it to the people who really do need to level up their wealth, the people who do really need to have someone kind of guide them and have their back. And that's essentially what we have done from the start and what we want to continue to push on. And
so if your minimum at JP Morgan was $25 million in net worth, what's the minimum to be a client of the Robinhood Strategies group?
It's $50.
It's $50. Okay, so talk about that, right? So you're providing you've got a team, right? And providing bespoke service-ish. Talk to us about that. How bespoke is it? Because a $50 minimum, what kind of balance you strike?
You don't get I would say you don't get as good of a overall service. The minimum to have what we think is the best implementation of our portfolios is $500. So it's still quite low. And we're leveraging technology to a full hilt. So you go through and you answer a few questions. That's somewhat similar to the way you might interact with a robo-advisor. And then we share with you the portfolio that you've given, why you should be given this portfolio. You can make changes. One thing we know also by our customer base is that we want to be able to make sure that they understand they still have, it's still their money. It's not like they're just handing it off and that's it. They have an ability to restrict stocks. They have an ability to kind of make changes to their answers and then see real time how their portfolio might change before they commit to it. And then we put them in a portfolio at $500. You get a mix of stocks and ETFs. And that to me is one of the biggest things, is that I feel everyone needs to have their cash of rainy day. Then they have their core portfolio of like ETFs that put them in the right kind of risk return profile. But that's where I think some competitors have stopped. And I know ETFs are cheap, and I know all of the reasons why people would invest in them. But I think if you want to up-level your wealth, you need to also invest in some of the secular themes that are out there. You need to take a little bit of risk with whatever the appropriate portion is. And so we also include single stocks in the portfolios and try to be tactical. We actively manage the portfolios. And then in the dashboard of your account, you will receive messages from us whenever we make a change to the portfolio. Why did we make that change? Something big happens in the market. What do we think about it? How is it going to affect you? And then we'll use that platform as well to provide, when the IRS comes out with their new IRA contribution limits, like, hey, by the way, this is it. Hey, did you do it yet? Make sure you do it, without having to talk to you one-to-one so far anyway.
Got it. So there is an element of guidance that's being provided, even if it's a digital nudge versus a sort of person picking up the phone and giving you a phone call.
But we leave verbal messages for you.
Okay.
Like you actually can listen to me telling you.
Oh, great. Okay, so there's a voice element. Well, it's interesting that you have touched on something in that description, Steph, which was still making sure that the client has a sense that it is their money, that they're engaged in having a say in how it's being invested versus handing it over to an advisor and sort of stepping away. Talk to us a little bit more about how retail investors behave and how it may be different from some of the ultra high net worth folks that you have worked with in the past. What's their appetite for tokenized assets, for example? What's their appetite for crypto as a part of their portfolio? Give us a flavor for what has surprised you as you've stepped into more retail investor engagement.
I think they are more willing to buy into secular themes, in that they're not necessarily naturally skeptical. I think they're more like curious and staying open. This generation has access to way more information than previous generations did. And the majority of the money, if you're a private bank, they're older. They're, they've already gone through their whole career. And so we have younger on average, they have more time horizon, and they are more willing to invest in things like crypto, consider things like tokenized, look at like what's happening in the world and be plugged into that. Look, let's face it, like the market is politics and vice versa today. And I think that's, something that they've really honed in on. We even saw it during the election, like how they really, it wasn't up for grabs for them. They kind of knew, I think, in advance who's going to become president and what that might mean for the markets. So I think they're just more willing to do that. The one thing I think is not different from the ultra high net worth person is that they still, like, there's people in their life that they care about and they would like to make sure get taken care of. And so if they grow their wealth, for example, we have our annual client conference every year. It's called Hood Summit. We had it at the beginning of September. We had one last year for the first time. The number of people that came up to me and said, this has leveled up the trajectory financially in my life. Now I can provide for my son in a way that I didn't get to have when I was growing up. And that is true. I mean, that is true. And that's why I think it's one of the reasons why I came to join Robinhood. It's one of the things that I think our customer base loves about us is that we listen to them and try to provide things for them that they actually ask us for. And that actually drives our product development.
Can you give us a flavor a little bit more, Steph, for who your client is? Because there is definitely this preconception that the Robinhood user is younger than you might see on Fidelity or some other brokerages. Is that, number one, is that a true statement? Is it a younger user base than what you see at competitors? And number two, talk to us about the proportion of women investors you have on the platform versus what you may have seen elsewhere.
Yeah, it is younger, at least based on the numbers I've seen. It's around 34 years old is like the average age. And it's more men than women. It's about 2/3 men versus women.
Interesting.
And I think that's pretty common. I actually think it's probably potentially more men in other cases. I mean, when I was working at JP Morgan in the private bank, most of the time I was talking, if it was a male-female couple, I was talking to the male.
Interesting.
So I think, and that actually, I think I would say Robinhood Strategies, and I don't have the numbers on this to back this up other than to say that it just feels like there's a little more balance there. And it makes me excited because women do need to know about money just as much as men. But the women that we do meet at Hood Summit, they know their stuff. Like there are women that participate in that. But yes, I would say the overall base is more male than female.
When you think about what you're trying to achieve at Robinhood Strategies, which is bringing to your client base the expertise, the insights that you get across the Robinhood platform, which is very large at this point, how do you balance that with Robinhood at the full company level, doing something like launching its own social network so that users have the ability to crowdsource investing ideas? What's the tension like between here is something that I, Steph, am doing, a lot of work's gone into providing these insights, it's packaged professionally, versus the same user can go sort of source ideas elsewhere on the app?
I mean, I think that exists today anyway. Like, I think social media has materially changed the way people learn and pick up investment ideas. So I don't think it's necessarily attention. I think it's the fact that, look, we've got, over 25 million users, and there's not everyone's going to want the same thing, right? Like, I actually think even, this is not a new phenomenon, but people do tend to bucket their money in different places. Oh, this is my money that I'm going to trade and play with. This is the money that's going to be my long-term. Someone else can do it for me. This is my retirement money, and maybe it's one of those two. But I do think that there's room for all of it because it'll make me better. It'll make them better in understanding what we're doing and why we're doing it. And I think it's a very good idea because the one thing that I think retail has always had sort of thought of as like, the movie, Dumb Money, last one's in, last one's out. I think social media changes that because if you're somebody who's grew up in the financial services industry and you sat on a trading desk, you learned the most there. You learned the most by talking to somebody else about what you were reading and not necessarily always sitting in a classroom. So I actually think social media is like the place that you can sit there and like learn, even if not all the facts are right, even if not all the opinions are necessarily unbiased. I do think it's like the place where people can actually like really truly absorb and understand how financial markets work.
So from the seat that you have at the moment and again, the amount of data you're seeing, and also with respect to an internal network, the amount of chatter or virality that perhaps you're seeing around certain investing themes, what is it that you're saying to clients in terms of thinking about asset allocation, right? Equities are at record highs. We're seeing things like gold popping. Crypto is a big part of the Robinhood success story. Frankly, it's been a big driver of adoption, a driver of profit for the business. As an asset allocator, what are you saying?
So I think there's, it always starts with by making sure you have a foundation of like, okay, this money is solid. I'm not gonna, I have enough cash to cover expenses if something happens to my investments, my job, whatever it is. And then I think, like I said, you have to have some portion that's like diversified. And then I'm all for our retail investor, like going out and kind of, I think to your point, like crowdsourcing, like you see, on Twitter, like the open army and the people who are investing in Open Door and really believing in it. And I think I've talked about this on other, I've actually even been hit up on X about this, that there's, did I say Twitter before? I meant to say X. That there is, you just have to know what you're investing in. Like this is what I always kind of just reinforce is that the momentum can only take you so far, and the company actually has to produce in terms of growth and really be changing something about the future. And so that's kind of what we say. Am I worried about equities? I mean, I was worried about it for the month of September because it's usually a bad month, and it didn't turn out to be a bad month. And so I was kind of hoping for that like nice, healthy correction of 10%, and then we would bounce back. It didn't happen. And so, now we're in this weird period where earnings are starting to come. They're probably going to be strong. We are in, kind of weird place with the government right now. So I think there are some things that in the near term, there can be a correction at any point, but I'm not necessarily saying that like you should run for cover yet. And there is a lot of talk about, are we in a bubble? I think could be moving toward one, but I actually think the more people say we're in a bubble, the less likely we're in a bubble.
Oh, that's interesting. Why do you say that?
To me, it's just like when everyone's bearish about the market, like people like don't believe in the rally. That's not necessarily the case right now, but that usually means the rally can continue because you have people who are sitting on the sidelines and then they'll eventually capitulate and jump in and that will push it further. So I feel like the more the people say we're in a bubble, the less likely we are. The more people start being like, oh no, it's great, we're not in a bubble. And weird things start, more of these weird financial structurings happen. More and more debt is taken on, right? Oracle's like the first little bit of debt that's taken on. I don't think we're there yet just because these companies are making money. OpenAI isn't necessarily yet, but all these other companies are making money. So I'm not worried about it yet, but I could see us getting to a point where it should be worrisome. So I'm not saying I'm not worried about any of the risk taking yet.
Not yet. Okay. Well, at some point you'll come back and we'll have a refreshed perspective on that one, and we'll see what the data bears out. Let's talk about some of the international growth strategies. You said at the top, Steph, that growing internationally is a strategic priority for Robinhood. How is that actually happening in practice?
We have a UK business now that's growing. We do have an ability to trade tokenized stocks in Europe through our crypto business, and we will be announcing soon some other expansions in other parts of the world. And then I think, these are all kind of flags being planted. And I could see more product coming to those areas after the flags are planted as well.
Let's talk about tokenization. And just to be clear, tokenized stock access is available in Europe, but not for your US clients right now.
Correct.
Why is that? Why only in Europe, not here in the US?
It was a faster way, I think, for us to kind of launch something like this. We don't have a local custody business outside of the US. So it was a way to sort of, bring it everywhere. And the rules are actually a bit easier in Europe than they are here. Obviously, stock trading is very broad here.
So, and talk to us about tokenization. So just to sort of define that for folks listening, it's essentially a digital twin, right, of a real world asset. So it means if you're sitting in Europe, you can buy a digital version of a US stock or ETF, whichever you've made available. It sits on the blockchain. There's close to real-time settlement, right? There's pretty robust trading hours, 24/5. So people have been advocating for it. Others, like OpenAI, to pick on OpenAI, actually came out and said when Robinhood offered tokenized versions of equity in OpenAI was pretty quick to come out and say this had nothing to do with us and there was no transfer of ownership. So where do you sit right now on where the adoption cycle is for tokenized assets?
I still think it's in the early innings. I mean, the tokenized, I see a lot of benefit for it because there is so much operational stuff that goes on behind the scenes of like running a brokerage in terms of settlement and dividends and corporate actions and things like that. And actually tokenized assets make it a lot easier. Like it's just, you can track it moved, we're done. And you do still own it. Like there is stock being held at a custodian, to back it up and you still get a dividend. I think it feels a little maybe less necessary in the public U.S. market, but I'm sure Vlad maybe would disagree with me on that. But I see the benefit of it in the private space, and obviously it would take companies being okay with it and all that sort of stuff. But to make something easily transferable. Like in the private bank, people would own these private equity funds, private credit funds, want to sell them. And then we had this internal system of like, hey, you want to make a bid on this? And then some other person in the private bank, not to be named, would be making a bid. And then you try to move those assets. It'd be a ton of paperwork. If you can easily just be like, this is the last valuation. Can I transfer it to you? Yes, sure, I'll pay you. Here, move it. Like that just feels like the right way to make it most efficient. But I'm learning like private businesses, they have, like, they're very careful about who they are allowing to have access to their businesses.
Yeah, there's not as much transparency for sure on the information around them. Yeah. Let's just switch gears a little bit, which is another product area that Robinhood has been making a splash in, and that's prediction markets. Talk to us about what's going on there and how big a part of the growth strategy that might be for the company.
It's really exciting. Like, I think it's first of all, it's fun. I mean, you can bet on. Maybe that's the wrong term, but you can
bet's a very weighty term at the moment for sure.
But it's, you can kind of make a prediction on what you think is going to happen in so many things that just didn't exist before. I was just looking at the government shutdown. I was looking at Fed, rate cycle. CPI reports, things like that. Like, you can, those parts are the things that I think are so interesting because you can actually use it to hedge your exposure.
Oh, talk about that, because there is a preconception that it's not investing and it's not an investment.
That's why I think, like, okay, maybe if you're betting on like who's going to win an Oscar, that's not necessarily investing. Although, I mean, maybe if you're in the industry, maybe that is a way. So I think you have to think about your exposures holistically. I used to do this all the time when I in my previous role. What job do you have? What industry are you in? Now, what are you invested in? Okay, so, a lot of people tend to invest in the areas that they already work in because they know it very well. So if there's a way to kind of hedge that, like if there's a risk that the government shutdown, for example, goes on for a very long time, the last one was, 35 days, and it was under Trump. If it goes on for a much longer time, that could actually start to break sentiment. It could start to hurt a lot of things in the economy. So you can do a couple of things if you're nervous about that. You can go buy a put option maybe. Or you can bet on potentially how long it's going to go on for. And that's actually, like, you can see it. It's in a bunch of different places. I think the recent odds is something like 24 days. But you can go and say, I think it's going to last more than this amount. And then if you are right, you get paid the difference between the price and the total cost, which is usually $1. So if it's like 50 cents on the dollar, you get paid 50 cents per the amount that you put in. If it goes on for longer than that.
But then talk to me about how those odds actually get made, because isn't there an argument that the folks who would actually place those bets could be folks who've got inside information? Isn't that where the majority of people willing to put their money on that kind of outcome?
I don't know how widespread that is. I feel like it is pretty diversified in terms of the players that are playing it. So I think it's actually been pretty right. If you look in advance at those before before this last Fed cut or the one before that, like, they've been pretty right. Election, they were pretty right. Like, it hasn't been necessarily wrong. I tend to follow them when I'm watching a sports game too, or from watching, like, I was watching US Open tennis and watching the odds go up and down. And it actually, like, does real time react. When I was watching the Yankees game then against Boston.
There you go. I just want to wrap, Steph, by asking you a bit more about your personal trajectory and what your career's been like. And just before we started recording, you confirmed that you joined Robinhood in sort of the fall of 2021. And just to go back, 21 years, you were a senior person in the JP Morgan's private bank. Fantastic reputation personally there, fantastic reputation of JP Morgan. You've got an iconic leader and CEO. It's 2021. We've had the meme stock craze, right? Your CEO at Robinhood has been called before Congress to talk about what happened in the GameStop situation. You're at JP Morgan, you get a phone call, and the phone call is, Steph, leave your job where you've been at a place you've been 21 years, at a pristine reputation bank, and come over to the sort of maverick right now of the financial services industry. What was going through your mind when you got that call?
At first I thought that it was not a fit because of everything you just said. But the year before that was COVID. Yeah. And a lot of things, I think, just shook up for a lot of people, not just me. But I started rethinking, like, okay, I've been here 20 years. Do I spend another 20 and then that's it? I'm a lifer and I'm done? Or do I think about making a change? And that was decision one, which I'd kind of decided already in my head. And I actually had an offer somewhere else. But decision two was to go to CEO. And I thought, this is a place that is completely different. seems risky, definitely riskier than JP Morgan. We'll just put it that way. But there was something about the people that I worked with, or I work with now, I should say, that I met at the time, that just, it was, I don't know how else to say this other than like, sometimes at a large place, like a bank, you have to be somebody maybe that you're not always. And I think where I felt at Robinhood in talking to those people is that I could actually be me.
Be yourself, right?
I could be fully me.
Yeah.
And that my ideas were good. And that's where I felt like, oh, maybe this is the breath of fresh air. And then third point for me, just, and this is a personal thing, is that just given my family's background and things like that, I had always kind of, I think, chosen the safe, solid way.
What's your family's background?
So my mom was born in a refugee camp in Germany after the war. So that side of the family was always quite like, owned a lot of gold jewelry and didn't have much in the bank accounts, had cash, right? Always had a garden, like always like sort of took care of themselves and worked really, really hard. Immigrated here, sort of when my mom was 12, maybe. She lived in Australia for a bit before that, so Australia and then New York. And then my dad's side, his mother was born in what was called Palestine at the time, but was Israel. And just before the Depression, and had come to New York, lived on the Lower East Side. Couldn't finish high school because she just needed to work. And all of her sisters, same thing. And then the man she married, my grandfather, was in World War II, floated in the water for a few days after having his ship being bombed. Like, so many things happened in our family. Mm-hmm. And I think the thing that, for me, is like they all did this to get me to where I am. And so should I be playing it safe?
Yeah.
And so, sorry, this is an emotional topic for me, but I think like it was sort of like what's the worst? In my head, I was finally like, what's the worst can happen? Actually, there's nothing bad here. And so go take that risk and use your skills to actually help people, level up their wealth. Like, take everything you've learned and help the people who don't have money yet.
Well, thank you for sharing that, Steph. Look, I'm first generation to college. My mom is an immigrant. And it is, I think, what you've just shared, and thank you for, it's a very personal story. It will resonate with a lot of people who ask themselves, am I pursuing a career because it's the right one for me, or because there's an expectation that's familial or multi-generational, and because security and financial security is so important because lots of people haven't had the opportunity to have it. So whether it's through investing, whether it's through Robinhood, whether it's through the careers that we choose, it matters. Yeah. So Steph, thank you for sharing everything, not just about Robinhood, but about yourself. And please come back because there's a lot going on that you're really at the forefront of. So appreciate you coming.
Thank you so much.
Thank you. I'm Anne Berry. Thanks for tuning in to After Earnings, the show that brings you up close and personal with the executives behind the world's most interesting publicly traded companies. If you learned something today, don't forget to like, subscribe, and share with your friends. Come back and we'll see you soon.